I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market gained ground again this last week as the S&P 500 and the NASDAQ moved to all-time highs. Focus clearly on earnings, and Friday got a lift on great numbers from Google and Starbucks and Intel and Twitter as the markets just are continuing to surge. The Dow Jones Industrial Average lagged, weighed down by Boeing with a huge charge-off of $5 billion and continued problems with their 737s. Several pieces of background news knocked equities back a couple times during the week, but that didn't really matter. Richmond Fed, their measure of the economy plunged. Shipments, new orders, employment, all of those numbers very weak. And then across the big pond, German manufacturing plunged as that economy and Europe continues to be extraordinarily weak. And the Department of Justice opened their antitrust review against big tech and e-com stocks. No matter what, no matter how much they dipped, buyers continued to come back each week, here with Friday moving up to new highs. Investors also applauded the big budget deal, a can-kicking piece of crap. This proves there are really no more fiscal conservatives out there, as the president could pull this off, succumb to the Democrats, and the deficits that are coming are destined to grow at alarming rates. We're looking at some $40 trillion in debt here in the country, not too far down the road, maybe 12 years or so. It's an enormous amount of money as the debt grows at a rate far beyond that of any potential growth in the economy, maybe 3 or 4 times the rate. It's a sickening thing. And if in the next decade, and which will likely happen, we see the Dow Jones, the indexes, cut in half, remember this deal, because the conservatives completely gave way and succumbed, and this is absolutely ridiculous. In Europe, we got these slower numbers, and Draghi made his final speech as he leaves the ECB, and then hands it off to Christine Lagarde, who, if you thought Draghi was a dove, well, Christine is, I don't know the words. She's going to bring more QE, maybe much more aggressive, maybe qualitative easing. Who knows what they're going to be buying, and certainly in favor of negative interest rates and more negative interest rates. And this here in the United States is the Fed week. The 25 basis point cut is baked in the cake. The markets are okay with it, and you know that they expect that. And also we see another 50 basis points baked in over the next 6 or 8 months. So there's a lot of anticipation of lower rates still to come, and we expect to hear Fed dovishness. If there is a 50% cut or there is no cut, I think stocks are going to get hit quite hard. So they're really happy in this Goldilocks economy. It's not too hot, it's not too cold, it's just kind of sitting there at a 2% growth, according to the latest GDP numbers, and they're just fine with that. And it gives the Fed the opportunity to keep the stimulus, the needle in the arm of this economy and these markets and these investors that seem to be pulling money out of who knows where to buy these stocks that keep moving up. With the economies weak around the world, more easing in the pipeline, clearly the Fed is pushing on a string, however, because they can't really get growth moving up. We see no growth really in the European countries, and certainly Japan just languishing again. So all of this just doesn't plain work. But they keep proving that definition of insanity. You keep doing the same thing all the time that doesn't work. It's crazy. It's a sad thing, and that's the world we live in, and that has created false earnings, false valuations, all of that. But we still think, of course, that the stock market is bullish because we read the technicals, and there's been no change in our belief, and we think that the stock market is good into the fall. We have been looking for the S&P 500 to move up to a target of 3032. Right now, as I do this show around midday, we're only about 8 points from there. So it's been a great call and really following our analysis and momentum really clearly. But now we think upside progress is going to be slower and volatility higher. We talked about in the last couple of weeks, we've mentioned that historically when you get where we think we are now, about to start forming a big long market top that may take many months, more volatility comes in the market. And I can see the buoy way out there in the distance that says choppy waters ahead. We think that the upside, maybe 2% left in this market. That's not very much. And we think there's going to be downside movement in here that are pretty severe. 5, 7, 10% quick drops. I think that's all normal, and all I think that is going to come within this uptrend that is likely to continue for some months. So we think it's going to get choppy, wilder movements, and I think that's going to be a much better market for traders than we've seen in a long period of time. Stock market for the week up 1.5 to 2%, mostly, depending on the index you look at. The Dow Jones Industrial Average not changed very much at all. The bond market, 30 years down about 1/4 point. The 10-year yields move up about 3 basis points. That 6-month to 10-year yield curve, dead flat on, 2.08%. Gold loses about $6. That shows you the relative weakness to silver, which again put a gain on top of a huge gain of about 24 cents on the week. Silver's been much stronger. It's been trying to lift the complex, but mostly doing it on its own. Platinum moving up a little, but copper languishing. We kind of think the copper is going to get another move up. Watch our Future Speak show on Wednesday, our most popular video from our members that watch it again and again. So become a level 2 member for that. Talk more about that in a moment. Dollar up a big 1%, big upside move. It's hard to explain with interest rates going down the attraction into the dollar. It's mostly because of the money flowing out of the euro as the economies there are slow, euro getting very weak, and at 0.57% of the dollar index, it affects the dollar. So the dollar goes up inversely when the euro goes down, and that's what's been going on. UK also in a lot of trouble. Johnson comes on, May leaves, and he's essentially clearing the slate. That's what emptying the swamp may look like, and we may be looking at a hard Brexit there, and that's why we see such weakness and breakdown in the British pound. We talked about that also the last couple of weeks in Future Speak. Oil, a few pennies change, really not very much. Continued supply issues as oil just builds in China coming out of Iran, and supposedly it's filling all the tankers and the boats, and there's tons of oil over there. Iran, well, they're still able to sell it through China, so much for sanctions. Make sure that you follow me on Twitter at askSlim, and go to YouTube, and of course this show is available at our partner sites, on YouTube and on our site, so it's available in a lot of places. And if you go on YouTube, then become a YouTube subscriber, give me a thumbs up, and love to hear your commentary on that. That is the opening segment, and I'm going to be right back, and I'm going to bring you the best and worst for the week. All right, each week I go through 300 some stocks, look for the biggest and best movers to the upside and the weakest and biggest movers to the downside. Then I pick out 5 that I think are the most interesting in both directions and bring those to you. The first one I'm going to show you, UPS, United Parcel Service. The stocks in the shipper category have struggled. FDX looks horrible to me. UPS has looked bad, and now it looks better. The earnings expectations had been lowered, downgraded, and it would made it pretty easy for UPS to come out with a big beat. They beat on earnings. Analysts have been upgrading the stock. They beat on revenues. And what has happened, and this is going to help Federal Express too, is that their overnight shipments have really picked up. So all of the one-day shipping that the online companies are now in a competitive way offering, well, they are relying on these companies. And you can see UPS here. Look at that week. Now, this giant upside week that we see in here looks to us like it could get up to that pretty good resistance zone at some point in the next couple of months, which would be up around 125. A lot of analysts have targets up around that area. This is key. You see this cycle peak right over here. You'll see the cycle analysis. These are cycle brackets. They are simply guides. They're not the cycles. They help us see repeating rhythms in the market of the average cycle length measured from low to low. So you can see that these come in right around the average, plus or minus a few weeks. It's pretty typical. And that says that this is likely to run out of gas pretty soon and have a little bit of a correction. We're projecting it to pull back to about 114 to 23% in the next month, and then be moving up again. So this, of course, would be a buy if it moved down here. It's moved up through the VTL. A VTL is called a valid trend line, and it's identified through specific important cycle peaks. And once it breaks out or breaks through it or breaks down under one, it's a positive or a negative. This one didn't give you much chance anyway because it just gapped right through it. So it wouldn't have been a great advantage, but it does give you a pretty picture here as you moved up through this cycle peak resistance. You moved up through the 61.8% right there. And this is, when it does that, a bullish occurrence. Hence, we're looking for a pullback that's viable and then another move to the upside. So a good report out of UPS and definitely a better looking stock. I don't know about down the road when Amazon and Walmart and the other companies really take over the shipping. It's going to hurt them, but in the meantime, it's good numbers. Twitter's a stock that we have been very bullish on, and we've seen these formations continue to form positively. Positive cycle here, hit support, buy zone. We actually told our members about this and put it on our long side trade setup list. And you see the upside move. We've since pulled that because it moved out of the buy range. It doesn't mean it's not still bullish, and it is. You can see the target up here is to about 48. That takes you up to the diamond measurement that we see right over here. And we could see 48 coming in the next couple of months. So a good looking stock in here. We've loved it and still do. Adjusted earnings slightly beat by a penny, revenues strong, and user growth very strong. We've been positive, and the numbers are sure backing it up. Discover is the next one we're going to look at here on the positive side. Look at that stock scream. So what we do is we take this low right over here and this cycle right over here, and we extrapolate out of that and do Fibonacci projection levels, and that gives us target numbers. Generally, the targets on a positive cycle like this are the 61.8% fib extension, or the target zone between the 78 and the 100% fib extension. You'd be shocked at how many stocks hit those upside numbers after they have these positive type patterns like that. Well, this was just a beautiful one. Discover moves up very sharply. It was a big beat. Analysts all over this one. We see 97 on the stock in the next 1 to 2 months. So given a little bit of a pullback in here, we could see it moving up again. Google's the next one, GOOGL. We missed this one clearly. What we look at is are the highest probabilities based on the formations. Now, generally, when you get a low that gives up 100%, like this one did, it rallies and gives up 100%, the stock fails in the resistance zone. So the resistance zone would have been right around here. Then when it moves through, well, it's a lot better. Well, you wouldn't expect it to give up 100% or 90% again, but it did. So this one has been fooling us. We had a buy zone right over here, but the antitrust news came out and the stock moved through the level. Well, it turns out we were right about the timing. We had projected a low as June 19, and it was June 3rd that the low was made. So it was a perfect timing projection, but it broke down slightly below our numbers. It's done it again. It moved up through what we had as a sell zone because of this big decline, and now has gained all of this ground all the way back. This is an unusual condition. It doesn't necessarily mean the stock is absolutely going to run away on the upside, but it's a surprise to us. So when we get it completely right, well, I tell you. When we get it wrong, I want to tell you that also. Google up 10% on the week. Their earnings were huge. Analysts all over it raising their targets. And they come back with a $25 billion buyback. It does blow me away that they'll spend $25 billion on their stock when they do Dutch auctions that are like, 200, 500 or 700 points below these levels. So they sell it cheap, they buy it more expensive, but that just shows you that big corporations got nowhere to put their money. I think that's poor language. They have nowhere to put their money, so they have to put it in their own stock, and eventually I think this is going to be bad. And we still think the stock is going to run into trouble because the business model is going to really weaken. If it hasn't started to weaken already, they could buy back their stock and keep it up, I guess. But we don't love it. I think that area of 1,300 is a big problem. And we'll be looking for it to fail sometime in the next few weeks. But in the meantime, these numbers were really good, and who can argue? Texas Instruments lifted the semiconductor group. They were basically up this week. Here's another example. Remember we said to you that when you have a positive cycle like this, we can put in these fib projections. Well, this one hit our target zone right over there, easily getting into that. There's room for this stock to go all the way up to 134 still, another 5-6 points, or it could stall in the middle of this. Based on the cycle formation, as you can see right in here, this one lasted through about 80% of the time in the cycle and then fell about 20% of the time. Right now it's about halfway through, so there may still be some more time for this to try to gain a little more ground, but we think it's going to be a lot of digestion coming in here. But it did lift the group. Texas Instruments hits that target, and we could see still some modest gains there in Texas Instruments. That's some of the best stocks and biggest movers of the week. There are really a lot of them because this has been earnings season, but I tried to pick out some of the best for you to see. Of course, our level 4 members can ask me about stocks that have had big moves, and I share my analysis with them, but you need to be a level 4 subscriber for that. All right, so that's the best of the week. I'll be right back with the 5 of some of the worst. All right, I'm going to bring you the worst stocks for the week, at least the ones that I look at in here. And we're going to start out by looking at SAVE, S-A-V-E. Of course, this is Spirit Air. And the spirits are not so good at the moment when it comes to the investors. And analysts that have any sense around important levels and breakdowns have to be all over this one, saying this has got problems. This we see as a clear breakdown in the stock. The stock moves down sharply. It breaks underneath this important cycle support level right over here. It rallies into resistance, gets under that level right there. It's not good. Gets under the 61.8, and we project it down to the 78.6%. The earnings beat, but their operating expenses surge. It's down 14% on the week, and interestingly, their operating expenses surge 14%. They kind of weighed on the group. American Airlines down about 3%. The rest of them not really down a whole lot in there, but they still underperformed the market, and a transportation category that is clearly underperforming the market in a big way. We talked about Dow Theory, and Dow Theory says there's trouble here. Tesla, TSLA. This is a company that is just a total mess. They lost more than expected, for some 400 plus billion. And this may never be a company that investors had hoped. Their co-founder and CTO stepped down. That might have been the really bad news. And this engulfing pattern from the sell zone, boy, is that ever beautiful, brings the stock down very sharply. We're going to be looking for a potential support area around 210 in here. But this pattern is not good. It may bounce around because of that support zone and hold up for a while. But we think that out into the fourth quarter or potentially out into next year, this stock's going way under 150, maybe under 100. It's really competitive. Cars are just coming down, running them down. They're great cars. I mean, who can argue with the technology? But the company is just very poorly run. And now that they can't, they're not getting the money out of the government. Consumers are going to be a lot more reluctant to be loading up on electric cars versus their favorite gas-burning models. So the market share is incredibly small. That could say there's a lot of room, but I don't think so. I think the stock is going to be a lot lower next year. Deckers, DECK, this stock down 12%. Their earnings beat. They lost less than expected. They still lost, and their guidance was up. But analysts are not excited about this stock at all, and it's had a big rally. But now I wonder, I want you to note 1, 2, 3, 4, 5. This was a neutral cycle right there. It was kind of a rectangle consolidation. So this stock has moved up basically in the last 2 years from 61 to 180. It's been a triple over these few years, and notice it following up the 34-week moving average right there very clearly. Now here's your lower support zones, and the 34-week moving average coming up here to about 147. Our best target for this stock is to decline in the next 5 to 7 weeks down to about 147. If it gets under this level right over here at 136, it will be the first negative cycle and a breakdown. That may be a lot to expect on the downside, but still hit our target zone and looks like a big top being formed. You have this big upside right there. You have all of these little stars that formed right there, and then the big downside. This is like a quintuple star, evening star, and that's a big top. And I think it's over with for this stock. I could never imagine how I walk into their empty stores and how the stock could do this well. I've commented on that before. I think the stock is done for. And I think if it had a rebound in here, it's a sell. Boeing, the next one we're going to look at, this is in a lot of danger. I've read stuff that said the 737 might just simply have to be canceled. I don't know if that's really going to happen, but this is at a very important level we're looking at right over here. So you see it moving down near that cycle support there. It's at about 330. On a stock like this, 15 points away, that's not much. If it got under that level, well, sayonara, it's going to be big down. And this megaphone top that actually expanded a little bit taller in here, well, that will have been a big top. This break here, the big gap underneath the 61.8, the failure in the sell zone right over here, our swing high, swing low analysis. Watch those videos. That gives you this area right there and moving down. I don't know what's going to save this. This is going to weigh on the Dow here, and unless they get some crazy approval on the fixes and then the airlines all decide to fly them again, that's going to be, that's a long shot. Are people going to want to get on 737s? I don't know about that. 8.5 point loss on the week, $5 billion charge. And again, I talked about Tesla being a mess. Well, this is a mess for this giant company like this. They might have to come out with a whole new airplane to replace that 737. And you know what that expense is? Well, just amazing. And on top of that, lawsuits and everything else. It's not a good story for Boeing, and I think it's going lower. Newmont, this is an interesting one because we were very bullish on the golds. And this is buffering, thank you. And the golds had this monstrous move. And now you see this evening star right over here. So what I want you to see is that this cycle right here, you can see that, there was a little bit of a shift in there, but it's made up basically of three small, what we call minor thirds. It's like music in the minor thirds. Now you can see the first minor third right over here, and it bottoming in about 2 weeks or so, 3 weeks. We think gold has got some weeks of consolidation in here also. Silver's probably going to pull back, and it's not going to help gold either. But you can see in the next, we'll call it 3 weeks, a month, this is the buy zone. We think if the stock gets under 36 during this period, that would be testing the breakout level right over there. We think it's a buy, and it'll be popping again to 39 or 40 there. And you can see the major cycle peak resistance, maybe at 41. It wouldn't be a surprise to see it get up to that level. We'd be a buyer under 36, 36 and a half, and looking for some pretty good upside. That is what I think is the best. The worst 5 for the week. Newmont down, well, only 5%. Again, there were a lot of stocks that had bigger moves, but I wanted to bring you the ones that I thought were widely held and the most interesting, and certainly there's some good ones in there. Newmont, I'm a buyer if we get that dip in the next few weeks. Don't go away. Sometimes some of you like to fast forward from this exact point because you want to get to what I want to say for the next week, but don't do that because I just have stuff here that's amazing to share with you. So I don't want you to go away. I want you to stay here and listen. I'll be right back. All right, askSlim has been growing. We have not only several people that have come on board to bring great content, timely content, but we have developed some unbelievably good content. We have new things for very active traders, and we have new things for swing traders, and we have things that are very usable for longer-term holders and investors. Let me tell you about our Level 2. Level 2 in the past offered our video library. That's over 400 videos. You'll never have another place to learn as much about trading and analysis and trader psychology, analyzing stock sectors and way longer term investments for your IRAs, and there's just so much incredible stuff. Tools for Techs has 80 videos on how to use different tools, technical analysis, and all of that included in Level 2 membership. You also get everything in Level 1, which is our weekly stock index report and our ETF report. Just a tremendous amount of information. And now we've added our stock index report daily snapshot. It gives you the zones, the areas that you'll be able to look at in 3 indexes with analysis, where you'll be able to see where it's highly likely that it will meet support or resistance in any of those 3 indexes, or the acceleration zones. The key to success is catching those big trades, making your winners much bigger than your losers. And so our daily snapshot, which comes out before the opening every day, has that analysis on it. Gives you those important numbers, the important analysis that you need for your index trading every single morning. And we're adding that now into our Level 2 membership and not raising the price. We're putting it in there. So there's just incredible amount of information in there. Now, what I want you to do is I want you to go and either choose our special, if you want to take a peek at it, 14 days, $14 trial. You'll have all of that every single day, full access to the whole video library, all of those reports. 14 days, $14 to review it. If you want, if you believe in that, you can actually take a special for our 3 months, which is a 25% discount. That's going to be only $74.25. For 3 months of that, that's actually 1/3 off of the monthly fee, And you'll be able to review all of that for the next 3 months. Only 24, I think it's 24 and a quarter. So it's 74 and a quarter, sorry. It's just an unbelievable deal. How do you get those links? How do you sign up? Write Matt, M-A-T-T, at askSlim.com, and you will get those. And now, important to show you what the Slimulator looks like. This is our level 3 membership, a different one. If we are running the beta now, and it's free. Level 3, you'll be able to see this special Slimulator by writing to Matt at askSlim.com, and telling him that you want to be included in that, and he will get you the ability to see. Of course, you could just become a free member. Free members, level 1, level 2 members, all can see the Slimulator. The Slimulator, an amazing piece of programming that we've done, which, and this all explains it to you, which brings you all of our logic, looking at the 84 best traded symbols, stocks, ETFs, indexes, and futures. It gives you long-term, intermediate term, short-term, and our option bias indicator, and our weekly charts. Those are updated once a week, which is a tremendous amount of information. It takes the sum of the evidence and then tells you whether or not we think it's bullish, slightly bullish, neutral, bearish, and tells you what we think is going to happen in the next 3 weeks. Well, what the system believes based on the highest probabilities. Technical evidence favors alongside bias in American Airlines. Apple, bullish. Technical evidence favors alongside bias. You can see bullish on the intermediate term, bullish on the long-term, intermediate, short-term, and our option bias indicator, which is a short-term indicator on whether you should, have a longer or short bias in your option positions. And you can search on this. Let's say I wanted to look for Twitter right here. You can see Twitter. I type that in. It says Twitter is very bullish. Technical evidence favors alongside bias, and it has all of this great information right in there. And you can just click on these and pop up those charts, and they come up nearly instantaneously. Just click the reset, and then you'll be back out to looking at all of these stocks in here, of the major helds and the best option traded stocks, ETFs, indexes, and futures. It's an incredible program, and I want you to go look at it. It's free right now while we're in beta test. You can make comments on it and help us even improve it more. And this free beta period is going to be about another 10 days. So about a week from Monday is when we're going to go into the full launch on it. So only level 3 members will be able to see it after that. And we'll, if you want to be included in that membership, I'm sure we'll have a special for it at that time. But go take a peek at it. Questions, write Matt at askSlim.com, and get those special links for level 2 and all of that stuff by writing to Matt at askSlim.com. I hope you didn't speed through all of that, but if you did, well, welcome back. And we're going to look now at our short-term view for the coming week. We like to be accountable to what we said in the previous week, and always looking at having good credibility with you by doing so. What I do is I rate myself by how the cycle patterns were, how well it traded regarding the analysis and projections, the support and resistance zones, and whether we thought it was going to be up or down. We also share with you momentum, which is the key to success in this world of high frequency trading and very deep markets and huge amount of money flows that come in. If you don't have momentum, you don't have it. So we give you that when we look at this also, and of course it's on our level 4 charts. We're going to start out by looking at light crude. And last week what we said is that, well, we thought it would be kind of a choppy week. We thought it would come down early, rally, and then come down again. We thought it would test the area in the sell zone, the slim ribbon right over there, and you can see it really got stuck right over there. So take a little closer look for you right there, and this is that light crude chart. So what do we think this week? By the way, we got light crude right, gold right, the bond market correct, stock market mostly correct, but we missed on the dollar. So that's why we get this 70 to 75% rating for the week. What we expect for the next week is that it's going to try the resistance area. So the resistance area right over here is the slim ribbon. Up to the bottom of this resistance here is where it kind of starts. So we think it's going to try to get up to 56.70 to 57.35 and then move down again. You could see our projection this year is it fails in the sell zone and then breaks the short-term support right over there. So we're looking for it to get below $55 again in the next 2 weeks. So a small little week that we expect in here where it probably gets up in here and fools around in the white space right there. We would expect that it will then fail and then a couple of weeks from now move down. Momentum has turned negative, as you can see right over there by the slim ribbon giving you the red arrow. It also colors the bars red, as you can see right here, and it colors the volume bars red. So if you have TOS, you can put the slim ribbon on the thinkorswim platform, our preferred broker, just by going to the our askSlim website to resources, and you'll be able to just get that link there to put it on your charts. Like crude, we expect it to chop around this week and then the following week move lower. Gold market /GC. We talked a lot about this one in future speak, which of course is included with level 2. And what we thought is that gold for the intermediate term is in a corrective period and likely to be range bound. Now you can see that area up here, which was fib projection resistance area, and it got up there, hit that 1454 and then got sloppy. And here's your short-term support, which comes in right on the slim ribbon. Momentum still strong. Interestingly, momentum in gold and momentum in the dollar are both strong. They're both showing up momentum, and that's kind of unusual. The dollar, I think the dollar momentum makes sense. The gold momentum maybe doesn't in this corrective period, and I think it's helped by silver. The Fed could help. You could get another pop in here, maybe late in the week, Wednesday, Thursday, Friday, if they're as dovish as I think they're going to be. So maybe we just chop around in here. We have kind of a narrow range. Towards the end of the week, we have another pop, and maybe get up to that area of 1440, 1450 in the following week. So we kind of think this is a choppy area right over here. I'd be surprised to see it getting much under the slim ribbon over here. We'll just say 1410. There's some support at 1402 also. So we're just going to call a range, 1402, 1450. And some upside attempts that don't work, some downside attempts that don't work, and probably a choppy period in there. We'll call small change on the week in the gold market. The next thing we're going to look at in here is the dollar. That's dollar sign DXY. And what we see here is that the dollar is strong. You see it moving up. This is kind of unusual because I said the Fed is likely dovish, but the Eurozone is even more dovish, and with Lagarde coming in and with the bad numbers out of Germany, the prospect for the euro is so bad that it's lifting the dollar in here. That's what we're seeing. So we're looking for some continued modest upside in here, and then rolling over. We're going to call it a small down week coming up, but momentum still strong. There's your minor supports, and they are rising. And this is improved situation and following patterns very nicely. The bond market next, /ZB, is what we're going to look at. I promise you we will. And there it is. And what we're looking at in here is you see all this sideways action, and it kind of looks like a head and shoulders, right? There's risk in here that we get a drop early in the week into the Fed. So we're looking for a decline in there and then a rebound. We're going to call it a small down week. A momentum, well, let's call it just an even week in here. It's pretty hard to call that. because we think we're going to get a dip and then be moving up again. So pretty hard to call. We think 2 or 3 weeks from now it's going to be moving up again. But look at the momentum. Look at that slim ribbon. When it's that choppy, it's just hard to call in there. So maybe the week will be a small up or small down. We're not really sure, but it would be probably a tight range still, but setting up for a big upside there. Momentum just not telling us anything, so we're going to be iffy in there. Not sure about how it'll end the week and how it'll act around the Fed, but I do think that 2 weeks or 3 weeks from now, this is going to be moving up again pretty significantly. So the stock market moving up, just incredibly strong, and we're looking at the S&P 500 trading just now about 9 points below what our target was for these coming weeks. It's pretty likely that we're going to see it moving up towards that area again, that 30-32 early in the week as we move to the Fed. I don't think that we're going to see a lot of action actually moving into the Fed. It's likely to quiet down a little bit, and then we'll see some pretty good moves probably after that. So here's what we're looking at in here. It looks to us like the cycle patterns, and we have some notes here to our members that they are narrowing. When they do that and they're following the upward momentum, clearly as you see here, that's bullish. There's anxiety to buy, and that gives you a good sense for what's happening. Here's the targets that we've had in here. This level right over here is the right around 30.32. That's a fib extension from the weekly. There's a fib extension on the daily at 30.41, and then this target zone, the bottom of it, at 30.62, which lines up with something on the weekly chart also. So remember we said in the beginning of the show 1 to 2% or 2% on the upside in here. Well, that's all into these areas of the target zone. It could be steeper on the upside in here. We'll look this week for a little more upside and then pulling back. Maybe it will get a drop right around the Fed because everybody's anticipating, and then of course up again. We're following the dotted lines in here, which are now the shortened, more aggressive cycles like that. The gray ones are the ones from before. We leave them in there because they could line up again, especially if the market starts to turn weaker, and we would expect then that to be a time period that would be if it were trading on these gray cycles right over there, we'd expect a weaker market. But right now, we're going to look for a market that tries to go up further, hits those targets, and then comes down sometime into late week, and then tries to move up again. I would not be surprised to see it very quiet into the Fed, and then all of a sudden the moves become bigger. When you see these lines, mostly they are forecast lines that give you a sense of timing. Based on how the formations occur, we could be moving them up or down. They don't give you a lot of sense of magnitude. I could easily put in another forecast line which takes you up into that target zone. But what I'm giving you is what I think is kind of a moderate look at the directional movements that we see in here. And with this upward momentum continuing, as you can see, there is a not much likelihood we're going to get below that slim ribbon at any time in here unless there is some shock that goes on. Bullish pattern that we're looking in there, we're going to look for a small down week. That's this a little minor cycle right in here coming down, and that would be a failure off of some maybe burst that comes around the Fed, and then declining into late week is the way we see it. Overall, still the strong upward trend, a strong upward market, and I think that you can, without seeing a major break, and that break being, you see that cycle low support right there, that would be the area that would be a problem. Underneath that level right there, 29.72, well, that's 50 points away. Well, it could happen, but we'd say it's a low probability. As long as we're above that level, as long as we're above the slim ribbon, all of that remains positive as it has been here for a while. Don't forget, take advantage of these special level 2 memberships. If you're a free member or not a member, sign up and take advantage. You're going to just see how incredible this information is. Matt works on the support resistance numbers every single morning. He's done a fantastic job. When it hits those acceleration zones, well, they really go, and that has been the way that a lot of traders have done really well. So please do look at that. If you're a short-term trader, you're going to be astounded. If you're new at trading, or relatively new, a few years, you're just going to learn so much from our video library. Do sign up. Your support is what allows us to have all of these people working and bringing you this such valuable content. Do become an askSlim member, premium member. That's it for this show. Next week's going to be a little different. I'll be traveling, and I'll be doing the show on my portable system for the first time. So we'll see how that works out. You won't see my face, well, at least not moving, and everything else will be the same. I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a city show.